Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for the week ending Friday, November 12th, 2021. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the developer and president of Simple Market Signals at simplemarketsignals.com. Simple Market Signals is a proprietary trend direction and risk management model. We will come back to this chart in just a couple of minutes, but I want to start off with a weekly candlestick chart of the S&P 500 to get a big picture view of what has happened for the week, and then we will look at the shorter-term charts over the next few minutes. Please stay with this entire video. I have a lot of really good stuff to share with you. Each candlestick on this chart does represent 1 week of trading. In the upper right-hand corner, we can see this week's trading. For the week, we were down 31 basis points, so not a lot of change. I think a lot of people probably feel like it was worse than that, but we were only down 31 basis points for the week, and we closed at 4682.85, down 31 basis points for the week. The next chart that we're going to look at is a daily candlestick chart of the S&P 500. Pretty short term. I just wanted to really focus in on a couple of things here. This chart runs from October 25th through November 12th, and on Friday the 5th, so a week ago, we hit at that time a new daily closing high. Well, a lot of people don't realize that on Monday, the 8th of November, we closed slightly higher. And so now, Monday, November 8th, is the day with the new all-time daily closing high. And we closed at 4701.70, and that was the first time we had ever closed above 4,700 on the S&P 500. On Friday the 5th was the first day we ever traded above 4,700, but on Monday the 8th, that was the first ever close above 4,700, 4701.70. I think that was on Monday the 8th, and we had a couple of negative days, Tuesday and Wednesday this last week, and of course that's where the negative 31 basis points comes from during the week. We did, regain some of the losses from Tuesday and Wednesday on Thursday and Friday, and so that's, again, when you run these 5 days together, that's why we were only down 31 basis points for the week, as we just looked at here. But new all-time daily closing high on Monday the 8th at 4701.70. 2 negative days, a couple of positive days, and that was really the crux of last week. But now what we're going to do is we're going to go back, and we're going to go back to the beginning of July, because I kind of want to walk you through on some shorter term charts. So these next 3 charts are hourly charts, but please stay with this because this is super educational. And I want to point out this 44.30 level, because this level has been so important for so many months. But we started off down here at around 43.05 during the beginning of July. I can't talk today. And by the end of July, we had gotten up to this 44.30 level, but couldn't penetrate through it, got rejected there, finally got above it on August 6th, and then traded sideways, kind of sandwiched between 44.30 and 44.40. And and then got above that for a few days, got rejected again. Anyway, this 44.30 level has been super important, as we can see, right? We've bumped up against this numerous times over several months, but also this 43.05 level is important as well, because we started off July here, we pulled back, right? As you can see here, towards the end of September, pulled right back down to this level and just kissed that level one more time. And that's what we see right here, all right? Well, we finally got back up above, towards the end of September, got back up above this 44.30 level, and then once again fell down below it. Now, this is where it really gets interesting, is we formed what's called an inverted head and shoulders reversal pattern. Much easier to see it on the hourly charts than on the dailies. And this is the neckline for that head and shoulders. And this, of course, happened during the first week or so of October right here. Left shoulder, head, right shoulder, broke above the neckline finally on October 7th, as we see here. But once again, as you can see, we came right up to that 44.30 level and just slammed on the brakes, stopped, got rejected for a few days, as we can see here, and then finally on October 14th, we had a really nice up day with enough upside volume that it pushed us finally above this 44.30 level, and that's right here. And from that point, right, on the 14th of October, with all that upside volume where we finally had enough juice, if you will, to get up above this 44.30 level, we just continued to melt up. And then on Friday the 5th, now we already looked at the fact that that is right now, this candle here, that is the all-time weekly closing high, but of course, and the all-time intraday high was also, as of this point anyway, of 47.1850. That happened on Friday, November 5th. Now, we got, as we know, just a tick higher on that on Monday and closed just above that at 47.0170. But Friday the 5th still holds the record for the close in the market as well as the all-time intraday high. But from that point on Friday, you can see we've just backslid just a little, right? So we're only off of these, the all-time daily closing high. We're only off of that just a small amount, and the all-time intraday high on the S&P 500. So it's been a very orderly pullback, nothing overly ugly about it at all, and especially after this really nice run that we had for several weeks coming out of that final break above 44.30 on the 14th of October. We should expect this, right? I mean, this is just part of what I call normal market action to get this type of a little bit of a pullback. A little bit higher volume, as you can see on some of the downside candles. The downside volume, some spikes there, but nothing extraordinary at all. So this has been very, very orderly. So I don't see anything here, guys, that there's so many people out there, and please be careful with these people that are saying the market's going to crash, the market's going to crash. Are things perfect? Of course not, but they never are. But I'm not seeing anything right here that is suggestive of of a major break to the downside in the market anytime soon. Now, anything can happen. I don't try to predict the market, guys. The fortunate thing for me is I have my my Simple Market Signals model, and any of you that are subscribers, you know how powerful that is. That's the tool that we use to help protect us. But I'm not seeing anything here, guys, at all that is out of the ordinary. Overall, from a stock market standpoint, things look pretty solid. Are you a U.S. equities investor? Do you want better results? Would you like to increase your upside, decrease your downside, improve your risk-return profile, and have the ability to sidestep major market downturns? To learn more, go to simplemarketsignals.com and watch this video that's on our homepage. Again, that website is simplemarketsignals.com, and I will also leave a link to this site in the description box below this video. Now let me share with you what subscribers are saying about Simple Market Signals. First, we are going to hear from KT from Michigan. I have been trading for many years. I did not realize that I have been trading in a completely blind fashion. SMS has given me the direction, literally, I've been desperately needing. This service allows you to clearly see what the market is doing. If you are remotely serious about trading or investing, you must try this service. Again, that's from KT from Michigan. KT, thank you. I appreciate that feedback. Next, we're going to hear from Rich A. from Ohio. Hi, Rodney. I want to thank you for creating Simple Market Signals and making it available to the average investor like myself. I work hard for the money that I invest, and I want to try to get the best return for my investment. Like a lot of people, though, I just don't have the time to watch the markets closely, and have been blindsided a few times in the past by market moves I didn't see coming. Needless to say, if I could have avoided those downturns, I would be much further ahead financially. This is where Simple Market Signals comes in. It takes complex market data and distills it down into an easy-to-use tool that anyone can use to see where the markets have been and are likely to go. It is sort of like a barometer that a weather forecaster uses, only easier to use. I like the fact that I get weekly updates from Simple Market Signals and also get updates anytime there are important changes in the markets. Your emails are succinct and to the point, and the signals are easy to understand. Depending on how much time I have, I can quickly scan the main points that Simple Market Signals gives me or do a deeper dive and read about the various market sectors and their performance outlook. Either way, I get the timely and important information I need. Thank you again for doing this and keep up the good work. Again, that's from Rich A. from Ohio. Rich, thank you so much for the feedback. I really appreciate that. Next, we're going to hear from SC from Florida. And SC writes, I manage my own money and I am not a professional, which could lead to a disastrous outcome as it has for many. Simple Market Signals is the equivalent of having a personal money manager that keeps you invested when it counts and alerts you to the potential dangers ahead. Now, I want to point out here, guys, I used to be a money manager. I sold my practice in 2016. So these are the exact words that SC from Florida wrote to me. So I just printed it as is. But I want you to understand, I cannot give advice, but this is the feedback that SC from Florida gave me. So I appreciate this. So again, SC writes that Simple Market Signals helps you stay invested when it counts and alerts you to the potential dangers ahead. The service is extremely affordable and takes the uncertainty and fear out of being in control of your own investments. I have done very well using this system and consider myself lucky that Rodney's YouTube channel came into view one day. I highly recommend this to anyone who desires an easy system to produce positive returns in the markets. Again, that's from SC from Florida, sent from his iPad. And guys, I want to point out the reason I'm using just the first and last initials is for the security of my subscribers, okay? I have hedge fund managers, very well-off, multi-millionaire clients. I have, people that are high up in various areas of the government. I have people from all walks of life. So just out of respect and security for my clients, this is the way that I'm presenting the information, just with their first and last initials as well as their state. Next, we're going to hear from FS from Massachusetts. Rodney is spot on in his reading of the markets. I was looking for a heads up to help me choose which side to use for vertical spreads. Again, that's from FS from Mass, and thank you so much, FS. I appreciate that. Next, we're going to hear from JV from New York. Now, I posed a few questions to my subscribers a few weeks ago, and this is the feedback exactly that JV from New York gave me with respect to the questions. So I produced it just as he wrote it. So the first question, what do you like best about Simple Market Signals? What JV said was, one of the things I like best about Simple Market Signals is that I have an easy-to-use tool at my disposal. I use the green, yellow, and red signals along with the general trend to help me determine how much equity risk exposure I want my investments to have in the market at any one time. I will either increase or decrease my equity exposure based on those metrics. The next question, what is important about Simple Market Signals to you? JV writes, I am a conservative investor. My main goal is to preserve as much capital as possible during market downturns, yellow and red signals, and to optimize my returns during green light conditions. The next question, how has Simple Market Signals helped you? JV writes, SMS helps me to determine whether to stay the course, increase equity exposure, or take defensive positions. For example, I will add additional funds to my equity investments during green conditions and move money to cash during red conditions. And the last question, how have you benefited from Simple Market Signals? JV writes, one of the benefits of SMS is that it has reduced the stress from always looking at and analyzing market conditions and worrying about it on a daily basis. And again, this is from JV from New York. JV, thank you so much for the feedback. I really appreciate that. To learn more, go to simplemarketsignals.com and watch this video that's on our homepage. Again, that website is simplemarketsignals.com, and I will also leave a link to this site in the description box below this video.